Hey everybody, JJ. It is Monday, March 16th. Very, very important update, so please stay tuned. A lot of news you probably have seen. The emergency rate cuts basically have failed. Stocks continue to plunge. Metals also slammed what many were considering a safe haven. Prices big time drop down, and we're going to show you the extent of those drops. But two important notes that we want to talk about this. This is not the end of metals. No, metals have not failed. We're going to talk about that. The solution that they're going to come out with is more loans and debt, and that ties into the metals being slammed today. Sorry, I'm actually at work. I'm going to try to rush through this one here. Trying to talk a little bit too fast. Banks need zero in reserves, and I want to thank a reader for pointing that out. What does zero in reserves mean? Well, it could be unlimited lending, and it could take some pressure off of the repo operations we've been seeing. Also, record manufacturing decline. Finally, I'm going to read through and react to your comments, some good, some bad, some in between. Let's get started. Boom, 2685 off the Dow, record-breaking drop. S&P down over 10%, NASDAQ down over 11%. We are living in historical times here, ladies and gentlemen. Right now, again, we knew this was coming. Been talking about it for a couple years. I thought it was going to be a bank failure. I don't think many people expected this type of scare that we're seeing spreading across the globe to be the pin that popped the bubble. But nonetheless, the bubble is popping. Now we're going to talk about how this ties into housing. There's some interesting information that came out just recently. We'll have to hit that in the next report, though. But look at this. Gold, 1510. Oil down another 9%, down to $28. Bitcoin below 5,000. Just everything just got walloped here. The short sellers are loving it. Now keep in mind, a lot of this is not just people selling. Of course, we have institutions, hedge funds, right? Corporate selling could be taking place, but also in addition to the selling, we could have institutions shorting the market. So not only selling, but pushing the prices down farther and faster by short selling these. Now here, in my opinion, is where it gets really crazy, right? So we have these emergency rate cuts. We have the Fed basically saying, and Mnuchin out there saying that they're going to do unlimited stimulus. Unlimited. No one knows how much they're going to pump into the system. But even with that, unlimited, nothing's bigger than unlimited. Still no confidence. Still prices plunging. What does that tell you? People have lost confidence in the Fed because it's much more than just pumping money, creating dollars out of nothing. It is panic, food shortages, lockdowns, quarantines, businesses shutting down. Massive job losses could evolve out of this. And this is all deflationary. And that's what I want to bring our next subject up here. Metals slammed today. Let's take a look here. And two important notes that you want to be mindful of here. Okay, we just talked about gold still hanging in at 1510. Not the end of the world. Silver, $12.86, people. Now, I've been reading a couple comment boards today and listening to some commentary on this. The metals hoarders, the stackers, what they call them, including myself, I do stack some silver, are getting not only slammed in the price, but they're taking a little bit of heat because they're saying that metal is supposed to be the safe haven, that people are going to run to precious metals. No, that's not what metals are. Metals are a insurance policy against hyperinflation. Everything that we're seeing now is deflationary. The job losses, the quarantines, the lockdowns, the businesses closing down. Deflationary, not inflationary. Right now, ultimately, after we see a bottom, and I think we're still likely a long, long way from any bottom or dip, I would normally give you a time frame just analyzing the markets, but we're in a whole new realm now with this pandemic that's spreading. Right, I'm not a doctor. I don't pretend to be a medical expert. I don't play one on TV. But just from a financial perspective, all right, so there will be a recovery. Who knows how long it's going to be? Who knows how hard and how deep this is going to be, this downturn. I think it could be Great Depression 2.0. So we could be looking at a prolonged downturn. But ultimately, I do believe that boom and bust cycles will continue and that we're going to see a rapid inflationary environment afterwards. And I think precious metals, I think real estate is going to go back up. I think ultimately the stock market's going to go back up. It's going to be continuation, of course, a lot worse this time and a lot more severe. because the bubble is much bigger this time. Add on top of it, the supply chain failures, the failure of Americans to prepare, the failure of Americans to be self-sufficient, have their own source of food. All these people packed into large cities are not going to be prepared. I'm not even prepared. People say I'm a prepper. No way, I'm not even close to being prepared. If you're truly 100% full-on prepper, you're living out in the country, you're off the grid, you have solar power, right? Your home is paid off, you have your own source of food, maybe a pond with fish in it. You can hunt, you have real-life skills, hunting, fishing, building. You grow your own food, you store food, you can food. That is a true prepper. Me, not even close. That's why I don't try to dive too much into prepping on this channel. But from a financial aspect, you do need to be prepared. I expect the banks to get a lot worse this time. There could be bank failures. Will the Fed let them fail? Well, maybe not. There could be massive bailouts, and ultimately, you and me and the working class are going to end up paying for this, because they may do tax cuts now to try to appease everybody and try to reduce the panic, but ultimately there's going to be record tax hikes here probably in the next few years as more rescue operations are implemented towards the corporations, towards the banks, and what have you. So yes, ultimately silver a good investment. I am buying more on this dip. All right, but here's the crazy part. The physical price and the paper price are completely disconnected. There are physical metal shortages happening right now. I actually got an email from SD Bullion here recently stating that orders are going to be on backlog. There could be delays. So why is the price plummeting on our digital screen here, but yet the physical commodity, the item, is running in short supply? That's because there's a disconnect. I believe that there is paper market manipulation happening here, and we don't have to look much further than Chase Bank's legal situation to know that it is true, right? So it's a combination of people selling on the paper markets and manipulation. Also, we have panic selling in ETFs and other non-physical items. Naked shorting likely going on as well. But we know central banks are hoarding metal, and I'm going to do as the central banks do, not as they say. Okay, here is the email from SD Bullion. We wanted to take a moment to provide our customers with an important update regarding our company and the state of precious metals industry as a whole. SD Bullion is experiencing a prolonged period of extremely high order volume. Last week we received the most orders in the history of our company. Our team is committed to shipping your order out as quickly as possible. Our fulfillment facility, we have hired additional staff to add a second shift at our sales office. We are onboarding new staff and working overtime to answer all your calls and emails. It's important to note that due to the exponential surge in order volume, you should be expecting delays of 5 to 10 plus days while our company continues to scale. So you can see right there, I'm not going to read the whole thing, that there's a disconnect between the physical demand and the price, right? So the laws of supply and demand have been thrown out the window when it comes to precious metals. Usually you have more demand and the prices are naturally going to rise because of the surge in demand. When there's less demand, then the prices have to fall to entice new buyers. But in this case, it's opposite. So the markets are all completely out of whack, just to put it quite simply for you. Right. Also, zero in reserves. This, on the surface, sounds like the banks can do unlimited lending, sort of like a central bank. There's no limit. There's no requirements. There's no reserve requirements. And here's the article. Let's pull it up here. Right, it's out of this article here. There's also a few other articles on this one's CNBC. The Fed cuts rates to zero. We knew about that. Launches massive $700 billion quantitative easing program. We knew that. But let's go down in the article here. Right, here it is. The Fed also cut reserve requirements for thousands of banks to zero. And they didn't elaborate too much on that. And I'm surprised. We're going to have to see if more news comes out about this. I'm also looking at it with a friend of mine who's also kind of an analyst of the financial markets, the economy, and seeing if he agrees with me. This sounds like it could be unlimited lending, that the banks will not even need to get help from the Fed. They could just press buttons and continue unlimited debt, pushing out loans, debt, and this is going to further erode the underlying guidelines as far as underwriting. And again, they could try to paper over this with unlimited lending, debt issuance. But when the Americans are broke and don't have even food and water, is it going to help? I think not. Also, record manufacturing decline. The Empire State Manufacturing Index saw a record decline, 21.5% in March. And remember, they're going to say, well, this was the greatest economy ever until this event started happening. But we knew that everything was on the decline. Manufacturing, debt was increasing. The banks were in trouble because they had to lend too much in order to pump these bubbles up to where they are. No surprise there, so I won't elaborate too much on this. All right, a couple quick comments. I just picked these out here earlier today. Didn't get a chance to read through the hundreds of comments that are left, of course. Dark Vortex 7 says, I'm a truck driver hauling petroleum, and things are looking very bad for the industry. Well, you're not in the only industry. It's going to be doing very bad. But thanks for that update here. We know that oil prices are dropping because of all the economic activity and just activity in general, with people staying home and all the events being canceled. Lower demand, lower prices. We also have the oil price wars and the OPEC nations refusing to cut production. So we'll have to see how this plays out, but it's deflationary for oil as well. Absolutely. Calissa says, looks like it's pronounced Calissa. I apologize if I didn't get it right. Calissa S. 1,400 people laid off here at Tesla in Vegas last Thursday. We told you the layoffs are going to be fierce with this. Job losses have to spike. Even the manipulated layoff numbers are not going to be able to hide, I think, what's coming. This is much more than a flu. Absolutely. Have peace, be prepared, but don't fear death. Wow, that's putting it pretty plainly there. Thank you. Adrian Brand, he says, it is hot here in Australia, and this stuff is spreading in the community. Summer will not turn things around. So we talked about, well, maybe things will calm down in the summer when the cold and flu season is over. This is no typical cold and flu, absolutely. And there you have it right there from Adrian. In Australia, where it's hot right now in this time of the year, it's still spreading. So we could be in for a long, deep recession, Great Depression 2.0, financial crisis. Right? Who knows how bad this is going to get, because we have, again, this unprecedented situation with the sickness and the panic and the fear that it's causing, supply shortages, and just millions and millions, lack of preparedness, including myself. I'm not fully prepared for this. But thanks for watching. Hope everyone is well, safe and healthy out there, and hope you stay that way. We'll be back real soon with another report. Thanks for being here. Hope to see you then next time. Bye for now.